Think you've got real estate vocabulary down? Let's find out with this vocabulary challenge from Birdsy. 44 questions designed to test your knowledge of the terms and related concepts that can show up on the exam. And keep an eye on the bottom corner. There's something there that could make a big difference in your prep. We'll explain in just a minute. Now, let's get started.
Let's start our challenge with a look at ownership and property rights. Fee simple, life estate, and leasehold. What is a key characteristic of a fee simple estate? Is it A, it provides the owner with absolute ownership and control? B, it lasts only for the lifetime of the owner? C, it is subject to termination upon the occurrence of a specified event? Or D, it is a temporary right to use and occupy the property? The answer is A. It provides the owner with absolute ownership and control. A fee simple estate is the most complete form of ownership, providing the owner with the maximum control over the property, including the right to sell or bequeath it.
Have you noticed the code in the bottom corner? Next time you're stumped, take that code to birdsy.ai for immediate help and a free study session with Birdsy, your personal AI study partner. Plus, you'll get access to hundreds of additional questions, helping you move closer to passing your exam with confidence. The next time you're feeling unsure or stuck, give it a try.
How does a life estate differ from a fee simple estate? Is it A, a life estate is inheritable? B, a life estate ends upon the death of the life tenant? C, a fee simple estate is temporary? Or D, both are limited by specific conditions? The answer is B, a life estate ends upon the death of the life tenant. A life estate is limited to the duration of a person's life, after which the property reverts to another party, whereas a fee simple estate is perpetual and inheritable. Which of the following best describes a leasehold estate? Is it A, it grants absolute ownership rights? B, it lasts for the duration of the owner's life? C, it is a temporary right to use and occupy property? Or D, it reverts to the original owner after a condition is met? The answer is C. It is a temporary right to use and occupy property. A leasehold estate is a temporary right to occupy and use land or property, typically involving a contractual agreement between landlord and tenant for a specified period. What happens to a life estate upon the death of the life tenant? Is it A, it becomes a fee simple estate? B, it continues as long as the heirs are alive? C, the life tenant's heirs inherit the estate? Or D, the estate reverts to the remainderman or original grantor? The answer is D. The estate reverts to the remainderman or original grantor. Upon the death of the life tenant, a life estate terminates, and the property typically passes to a remainderman or reverts to the original grantor. Which statement is true regarding the rights of a leasehold estate tenant? Is it A, tenants have ownership rights over the property? B, tenants have the right to possess and use the property? C, tenants can sell the property? Or D, tenants can pass the property to heirs? The answer is B, tenants have the right to possess and use the property. Leasehold estate tenants have the right to possess and use the property for a defined period as per the lease agreement, but do not own the property itself. Which of the following accurately describes the transferability of a fee simple estate? Is it A, it can only be transferred upon the owner's death? B, it can be transferred freely, either during the owner's life or via a will? C, it is non-transferable and remains with the original owner indefinitely? Or D, it can only be transferred to direct descendants? The answer is B. It can be transferred freely, either during the owner's life or via a will. A fee simple estate is the most comprehensive form of property ownership, allowing the owner to transfer the property freely without limitations unlike life estates or leaseholds. Easement, encroachment, and license. Which of the following best describes an easement by necessity? Is it A, a voluntary agreement between neighbors, B, a right granted for recreational purposes, C, a right to use land for access when no other option exists, or D, a temporary right to use another's property? The answer is C, a right to use land for access when no other option exists. An easement by necessity occurs when a property owner must use another's land to access their own property, typically when landlocked. It is essential for access and not based on convenience. What distinguishes an encroachment from an easement? Is it A, an encroachment is unauthorized, while an easement is a legal right? B, both are legal rights granted by the property owner? C, an easement allows building on another's land, while encroachment does not? Or D, encroachments are temporary, while easements are permanent? The answer is A, an encroachment is unauthorized, while an easement is a legal right. An encroachment is an unauthorized intrusion of a structure onto another's land, while an easement is a legal right to use another's land for a specific purpose. What is a key characteristic of a license in property law? Is it A, it grants permanent rights to use property, B, it is transferable to new property owners, C, it requires a formal agreement to be valid, or D, it is revocable and temporary? The answer is D, it is revocable and temporary. A license is a temporary, revocable permission to use someone's property, unlike an easement, which is typically permanent and non-revocable.
If you're finding this helpful, please take a minute to like this video and subscribe to our channel for more practice exams, useful tips, and complimentary study sessions with Birdsy.
How does a prescriptive easement differ from a license? Is it A, both are acquired through long-term use, B, a prescriptive easement is acquired through long-term use, while a license is temporary, C, a license grants permanent access rights, or D, both require the property owner's explicit consent? The answer is B, a prescriptive easement is acquired through long-term use, while a license is temporary. A prescriptive easement is acquired through continuous, open, and notorious use over time, whereas a license is a temporary permission that can be revoked at any time. What is the primary legal remedy for resolving an encroachment? Is it A, granting a license for continued use, B, creating an easement for the encroachment, C, issuing an injunction to remove the encroachment, or D, requiring the encroacher to pay a fine? The answer is C, issuing an injunction to remove the encroachment. The primary remedy for encroachment is often an injunction, which is a court order to remove the encroachment or cease the encroaching action. Which of the following is a defining feature of an easement appurtenant? Is it A, it grants temporary access to a property, B, it involves a dominant and a servient estate, C, it can be revoked at any time by the servient estate owner, or D, it applies only to personal property? The answer is B, it involves a dominant and a servient estate. An easement appurtenant involves two parcels of land, a dominant estate that benefits from the easement and a servient estate that provides the easement. It typically runs with the land, transferring with property ownership. Let's continue our challenge with a few questions on contracts and legal terms. Offer, consideration, and acceptance. Which of the following is not a requirement for a valid contract? Is it A, offer, B, consideration, C, mutual mistake, or D, acceptance? The answer is C, mutual mistake. For a contract to be valid, it must have an offer, acceptance, and consideration. Legal capacity and lawful purpose are also essential, but mutual mistake is not a requirement. What is the legal term for the exchange of promises or acts in a contract? Is it A, offer, B, consideration, C, acceptance, or D? The answer is B, consideration. Consideration is the exchange of something of value between parties in a contract, essential for the contract's enforceability. It can be a promise or an act. In contract law, what does the mirror image rule refer to? Is it A, acceptance must match the offer exactly, B, an offer must be in writing to be valid, C, consideration must be monetary, or D, contracts require a witness? The answer is A, acceptance must match the offer exactly. The mirror image rule states that acceptance must exactly match the offer without any variations. Any change constitutes a counteroffer, not an acceptance. What happens when an offeree makes a counteroffer? Is it A, the original offer is accepted, B, the original offer remains open, C, the original offer is automatically rejected, or D, the original offer is terminated? The answer is D, the original offer is terminated. A counteroffer terminates the original offer as it presents a new set of terms. The original offeror can accept, reject, or counter the new offer. Why is consideration necessary in a contract? Is it A, to ensure all parties are aware of the terms, B, to provide value exchanged between parties, C, to confirm the legal capacity of the parties, or D, to outline the consequences of breach? The answer is B, to provide value exchanged between parties. Consideration is necessary as it represents the value exchanged between parties, making the agreement binding. It distinguishes contracts from gifts, which do not require consideration. What is meant by consideration in a contract? Is it A, the mutual agreement between parties, B, the acceptance of an offer, C, something of value exchanged between parties, or D, the formal signing of a contract? The answer is C, something of value exchanged between parties. Consideration refers to something of value exchanged between parties in a contract. It is a fundamental element that validates a contract, ensuring that each party gains something of value.
Stuck on a question? Just think of the Birdsy link in the description as your friendly neighborhood superhero, swooping in to save the day with answers. Feel free to explore it now and return to continue. Simply hit pause, and we'll be waiting when you get back.
Bilateral versus unilateral contracts, executed versus executory. What distinguishes a bilateral contract from a unilateral contract? Is it A, a bilateral contract involves mutual promises between two parties, B, a unilateral contract requires both parties to perform specific actions, C, bilateral contracts are executed immediately upon agreement, or D, unilateral contracts are legally unenforceable? The answer is A, a bilateral contract involves mutual promises between two parties. In a bilateral contract, both parties make promises to each other, creating mutual obligations. In contrast, a unilateral contract involves only one party making a promise, which is fulfilled by the other party's performance. Which of the following best describes an executory contract? Is it A, a contract that is void due to illegality, B, a contract that has been fully performed by both parties, C, a contract where obligations are yet to be completed, or D, a contract that cannot be terminated? The answer is C, a contract where obligations are yet to be completed. An executory contract is one where some or all of the terms have not yet been fulfilled by one or both parties. This contrasts with executed contracts, where all terms have been completed. In what situation would a contract be considered executed? Is it A, when only one party has fulfilled their obligations, B, when all parties have performed their contractual duties, C. When the contract is signed but not yet performed. Or D. When the contract terms are still being negotiated. The answer is B. When all parties have performed their contractual duties. A contract is executed when all parties have fulfilled their contractual obligations. This indicates that the terms have been fully performed as agreed upon in the contract. Which scenario exemplifies a unilateral contract? Is it A. Two parties agreeing to exchange services for payment? B. A lease agreement between a landlord and tenant? C. A contract for the sale of goods with agreed delivery terms? Or D. A reward offered for the return of lost property? The answer is D. A reward offered for the return of lost property. A unilateral contract involves a promise in exchange for performance. An example is a reward contract, where payment is made only if the task is completed, such as finding a lost pet. Breach of contract and remedies. What is the primary legal remedy for a breach of contract? Is it A. Compensatory damages? B. Specific performance? C. Punitive damages? Or D. Rescission? The answer is A. Compensatory damages. The primary remedy for a breach of contract is typically compensatory damages. These are intended to compensate the non-breaching party for losses incurred due to the breach, restoring them to the position they would have been in had the contract been fulfilled. Which of the following is a requirement for awarding specific performance as a remedy? Is it A. The breach was intentional? B. The contract involves a service? C. The subject matter is unique? Or D. The non-breaching party is a minor? The answer is C. The subject matter is unique. Specific performance is awarded when monetary damages are inadequate, often in cases involving unique goods or real estate. The subject matter must be unique or irreplaceable to justify this remedy. What is the purpose of liquidated damages in a contract? Is it A. To punish the breaching party? B. To estimate potential losses? C. To encourage contract formation? Or D. To ensure specific performance? The answer is B. To estimate potential losses. Liquidated damages are predetermined amounts specified in the contract to be paid in case of breach. They provide certainty and avoid litigation over actual damages, but must be a reasonable estimate of potential loss. Which of the following is an equitable remedy for breach of contract? Is it A. Compensatory damages? B. Liquidated damages? C. Punitive damages? Or D. Injunction? The answer is D. Injunction. An injunction is an equitable remedy that orders a party to do or refrain from doing specific acts. It is used when monetary damages are insufficient to resolve the breach. Now let's check your grasp on finance and lending terms. Loan-to-value ratio, equity, and points. What does the loan-to-value ratio represent in a mortgage loan? Is it A. The interest rate of the loan? B. The ratio of the loan amount to the appraised property value? C. The total loan amount including interest? Or D. The loan amount after deducting down payment? The answer is B. The ratio of the loan amount to the appraised property value. The loan-to-value ratio measures the loan amount against the appraised value of the property. It helps lenders assess risk, as a higher LTV indicates less borrower equity and potentially higher default risk. How do points on a mortgage loan affect the borrower's interest rate? Is it A. They increase the interest rate? B. They have no effect on the interest rate? C. They decrease the interest rate? Or D. They change the loan term? The answer is C. They decrease the interest rate. Points are fees paid up front to lower the interest rate over the loan term. Each point typically reduces the rate by 0.25%, providing long-term savings on interest payments. If a property is worth $200,000 and the homeowner has $50,000 equity, what is the loan-to-value ratio? Is it A, 75%, B, 50%, C, 25%, or D, 100%? The answer is A, 75%. The LTV ratio is calculated by dividing the loan amount by the property value. If the home value is $200,000 and equity is $50,000, the loan amount is $150,000, making the LTV 75%. What impact does a higher equity percentage have on a homeowner's financial position? Is it A, increases loan interest rates, B, decreases property value, C, increases loan-to-value ratio, or D, strengthens financial stability? The answer is D, strengthens financial stability. Higher equity indicates more ownership of the property, reducing financial risk and potentially increasing borrowing power. It also provides a buffer against market fluctuations and aids in securing better loan terms.
If you're finding this helpful, please take a minute to like this video and subscribe to our channel for more practice exams, useful tips, and complimentary study sessions with Birdsy.
Principal, interest, and amortization. What is the primary purpose of amortization in a loan? Is it A, to increase the interest rate over time, B, to gradually reduce the principal balance, C, to ensure interest is paid first, or D, to calculate the loan's total interest? The answer is B, to gradually reduce the principal balance. Amortization in a loan is the process of spreading out a loan into a series of fixed payments over time. Each payment covers the interest expense and reduces the principal balance. How does compound interest differ from simple interest? Is it A, compound interest includes interest on interest, B, simple interest is calculated annually, C, compound interest is always lower than simple interest, or D, simple interest applies to savings accounts? The answer is A, compound interest includes interest on interest. Compound interest is calculated on the initial principal and also on the accumulated interest of previous periods. Simple interest is calculated only on the principal amount. What happens to the principal balance of a loan when only interest is paid? Is it A, the principal decreases, B, the principal increases, C, the principal remains the same, or D, the principal is fully paid off? The answer is C, the principal remains the same. Paying only the interest on a loan means the principal balance remains unchanged. This is often seen in interest-only loan periods or specific loan agreements. Which factor primarily determines the monthly payment in an amortizing loan? Is it A, the borrower's credit score, B, the lender's policies, C, the market interest rate, or D, the loan term? The answer is D, the loan term. The loan term is crucial in determining the monthly payment for an amortizing loan. A longer term results in lower monthly payments but more interest paid over time. Escrow, prepayment, and PMI. What is the primary purpose of an escrow account in a real estate transaction? Is it A, to provide a loan to the buyer, B, to hold funds until conditions of the sale are met, C, to determine the property value, or D, to negotiate interest rates? The answer is B, to hold funds until conditions of the sale are met. An escrow account holds funds or assets on behalf of two parties involved in a transaction. It ensures that funds are available for payment at the appropriate time, providing security to both parties. What is PMI and when is it typically required? Is it A, insurance required for loans with less than 20% down payment, B, a type of homeowner's insurance, C, insurance for properties in flood zones, or D, insurance required for all mortgage loans? The answer is A, Insurance required for loans with less than 20% down payment. Private mortgage insurance is required when a borrower makes a down payment of less than 20% on a conventional loan. It protects the lender in case of borrower default. How does prepayment affect a mortgage loan? Is it A, increases the total interest paid, B, extends the loan term, C, reduces the loan balance and interest paid, or D, has no impact on the loan? The answer is C, reduces the loan balance and interest paid. Prepayment reduces the loan balance faster, potentially saving on interest costs and shortening the loan term. However, some loans may have prepayment penalties, so it's important to check loan terms. What happens to escrow funds if a real estate transaction falls through? Is it A, they are automatically given to the seller, B, they are kept by the escrow agent as a fee, C, they are used to pay off the buyer's debts, or D, they are typically returned to the buyer? The answer is D, they are typically returned to the buyer. If a transaction falls through, escrow funds are typically returned to the buyer, unless contract terms specify otherwise. The release of funds depends on the conditions set in the escrow agreement. Let's continue with agency and representation. Fiduciary, dual agency, and designated agency. What is a fiduciary duty in the context of real estate agency? Is it A, a duty to disclose all known property defects to potential buyers, B, a requirement to advertise the property on multiple platforms, C, a legal obligation to act in the best interest of the client, or D, an agreement to split commission with other agents? The answer is C, a legal obligation to act in the best interest of the client. Fiduciary duty refers to the legal obligation of an agent to act in the best interest of their client. This includes duties of loyalty, confidentiality, and full disclosure. In a dual agency situation, what is a critical challenge faced by the agent? Is it A, the inability to fully advocate for either party's best interests, B, the requirement to disclose all financial information to both parties, C, the need to obtain separate licenses for representing both parties, or D, the obligation to charge a higher commission rate? The answer is A, the inability to fully advocate for either party's best interests. Dual agency occurs when one agent represents both the buyer and the seller, creating a conflict as the agent must remain neutral and cannot fully advocate for either party. What distinguishes designated agency from dual agency in real estate transactions? Is it A, both involve a single agent representing both parties, B, different agents from the same brokerage represent the buyer and seller, C, it requires a special license to practice, or D, it is only applicable in commercial real estate transactions? The answer is B, different agents from the same brokerage represent the buyer and seller. Designated agency allows different agents from the same brokerage to represent the buyer and seller separately, avoiding the conflicts of interest seen in dual agency. Our last challenge will focus on land use and legal descriptions. Zoning variance and nonconforming use. What is the primary purpose of zoning regulations in urban planning? Is it A, to increase property taxes, B, to promote urban sprawl, C, to separate incompatible land uses, or D, to reduce real estate market prices? The answer is C, to separate incompatible land uses. Zoning regulations are designed to segregate different types of land uses, such as residential, commercial, and industrial, to ensure orderly development and minimize conflicts between incompatible uses. Which of the following best describes a non-conforming use in zoning terms? Is it A, a use that existed before current zoning laws and is allowed to continue, B, a temporary use granted by a zoning variance, C, a use that violates zoning laws and must be immediately changed, or D, a use that is compliant with current zoning laws? The answer is A, a use that existed before current zoning laws and is allowed to continue. A nonconforming use occurs when a property's use does not comply with current zoning laws but is allowed to continue because it predated the zoning change. Meets and bounds, lot and block, rectangular survey. Which method of land description uses natural landmarks and compass directions to outline property boundaries? Is it A, meets and bounds, B, lot and block, C, rectangular survey, or D, geodetic survey? The answer is A, meets and bounds. The meets and bounds system uses physical features of the geography along with directions and distances to define property boundaries. It is one of the oldest methods of land description.
Thanks for joining us today. If you found this video helpful, subscribe to our channel for more practice exams, tips, and tricks. And don't forget to visit Birdsy.ai for complimentary study sessions with Birdsy, your AI-powered study partner.